In the age of instant coffee, fast services across the web and real-time communication, where everything seems to be available in a blink of an eye, here is a little test for you if you want to invest in the stock market. And in today's world, it seems like long-term investing has been replaced by more gambling than anything else. And well, the answer lies in this very interesting psychological experiment, which you probably tried and failed successfully without even knowing it. Hi, Jared here, and today let's talk about science and way more. Because first we'll talk about the curious experiment that shapes us as investors, and then the takeaways which can be extrapolated. So access to high-speed internet, discount brokers, and algorithm-based day trading have now become key to making quick money in the stock market, and investors are no longer satisfied to buy and hold stocks for the long term. And there we are. The Marshmallow experiment was conducted at Stanford University to understand the impact of patience and delayed gratification on our lives and how it shapes us and helps us to becoming successful. The experiment involved a group of children who were asked to sit on a chair and were offered a treat in the form of cookies, marshmallows, or anything they liked. They were free to eat it whenever they wanted. However, there was a condition. If they do not eat it for the next 15 minutes, they would get 2 treats. The instructor left the room and observed them from another room where kids were not able to see him. Seems strange, but you get my point. Few kids could not resist the temptation and ate the treat as soon as the instructor left. The few others waited patiently for some time but ultimately gave up and ended up eating the treats. And finally, a bunch of kids waited successfully for 15 minutes and were treated with bigger treats as promised. The interesting part is that the experiment went on for 15 to 20 years, as kids back then were now adults grown-ups, and the researchers followed their life to see how they did in their personal and professional life. Surprisingly, it was found that kids that successfully passed the test did much better in their professional lives in terms of school grades and in terms of better personal and financial health. So here are the experiment's takeaways. First, you must have a goal. Kids that successfully passed the test had a specific goal in mind. They had a clear objective in order to double the returns. Unfortunately, most of us do not care to make a financial goal in our life. Money influences all aspects of our lives, but without any goal to reach, we will never achieve prosperity. Having a clearly defined goal is important, not just to work towards it, but it also helps us keep track of how far we are in reaching the goal, and if there are some additional steps to be taken to achieve them. For instance, in my investing series, which I've called Invest With Me, which I upload monthly by the way, I have a clear plan and a clear goal. I want to have $500 in dividends each month from the $200 invested each month. Clear and simple. And then, around that goal, I've built a system to help me stick with that plan consistently. So, how to invest in the stock market. So if companies are worth investing in them or not. Okay then, takeaway number 2. All good things happen to those who wait. The second and very important takeaway from this experiment is that successful investors sacrifice today's rewards for tomorrow's prosperity. So just like the kids that sacrificed instant gratification for bigger rewards in the future, in a world where everything is available in a blink of an eye, patience is something we rarely practice. And if someone like you and me can master this skill, nothing is stopping him from achieving his goals. For instance, in my investing series, again, I plan to reach my goal in at the very least 2 years and maybe 2 to 5 years. Not less. I always think in the long term, no matter what I do in life. Whether it is investing, working for my YouTube channel, going to the gym, reading, and my life more broadly. Okay, takeaway number 3. Insulate yourself from the noise. With business channels constantly bragging about how you may have earned a lot of money by following their advice and regular suggestions by brokers, WhatsApp groups on buy and sell, it is difficult to resist the lure of easy money in the short term. However, if you want to earn money in the stock market, you must shield yourself from the noise around you and stay focused on your objectives. For instance, I downloaded the Yahoo Finance app on my phone. Cool app, I thought first. I can read the hottest and newest news of the stock market and the economy in general. But I was wrong. Here is a screenshot I've taken recently about a chunk of the notification I've received. For instance, stocks tumbled again. Breaking news about the Fed and growth fears, then Meta and Tesla, then another breaking news with rising then falling stocks, and NEO down around 9.55 1%. In fact, I receive close to 10 notifications a day about the stock market change and the companies I invested in. So it's around 3,650 notifications a year, which takes me around 1 minute to read each, so this adds up to 60 hours wasted each year, or roughly 30 movies that I could watch, or even 30 gym sessions. So fourth and last takeaway, be persistent, because investing is a long-term game, and you cannot expect to win unless you have discipline and persistence. And this is why you must keep investing small amounts of money consistently for a long time, no matter what the market conditions are, and stay invested all the time, resisting your temptation to cash out and book your profits or losses. And this is probably the most difficult part in life. You have to face your worst enemy, yourself. Because as Warren Buffett says, an investor's worst enemy is not the stock market, but his own emotions. And you will probably be tempted to cash all out if you are sitting on huge profits or huge losses, but unless you have achieved your goals or have an emergency, it is not wise to cash all out from the stock market. So by delaying instant gratification, you can achieve far better results in the future. It's a trait that not only helps you becoming a better investor, but also a better person in other aspects of life. And that's a thing you cannot learn, it's a thing that you have to experience. So what do you think about my habits, takeaways, and more broadly, the marshmallow experiment? I would be highly interested to know your point of view. Thank you so much for watching, feel free to leave a comment down below, subscribe if you want to see more, and I will see you in the next one.